Now we're going to go through a series of transactions and see how they interface with the special journals as well as the subsidiary ledgers. I'm going to assume that you've read all of the information that gives you the theory behind it and how all of this works. So we'll be walking through some of the transactions, but you may get lost if you don't read the lecture notes that set everything out. So here we have Pepper Company. All of the terms of all of their credit sales for the company are 2% if paid within 10 days. If not, the total amount is due within 30 days. We can see that they have a sales journal, and that is for all sales that are on credit. Then they have a cash receipts journal to record all cash receipts and also to record any cash sales. Then we have a purchases journal that will record all of our purchases that were done on credit. And then we have a cash disbursements journal that will record everything that is dispersed, all cash that's dispersed. Then anything that's not done on credit or is not a cash transaction will be recorded in the general journal. Now let's look a little bit on how these things interface with the individual ledgers. These are the subsidiary ledgers, so it's by a customer and the amount that they owe. These are the accounts payable ledger, so these are all our vendors and the amount we owe them. And this is our general ledger. And so this has all of the accounts. Now the accounts receivable account will be the total balance of everything that's in each one of the total of all of the individual accounts receivable subsidiary ledger individual accounts. Hope I said that right. Then this will be every transaction related to inventory that comes from the journals. This will be all of the office supplies transaction that comes from the journal, same for store equipment. Now, accounts payable, this total at the end of the period should equal the total if you add up all of the individual amounts we owe each vendor. This comes from our journals. The sales come from our journals. Sales returns and allowances will come from our general journal. And our sales discounts will come from the journals. This will come from the special journals, and this will come from the special journals. So let's look a little bit about how the special journals and how they interact with the general journal. Since this is a dedicated column, we won't update the amounts for accounts receivable until the end of the period. Same thing with this column since it's a dedicated column. Same for cash in the cash receipts journal, sales discounts here, accounts receivable here, sales here, and cost of goods sold. Now anything that is recorded in other accounts does go to the general journal over here as it transpires. Let's look at the purchases journal, dedicated column, not updated till the end of the period. Inventory, again, not updated to the end of the column. Office supplies, same here. But other accounts, that will be updated in the general journal as it transpires. Cash disbursements journal, dedicated column to cash, end of the period, inventory, end of the period. Other accounts will be updated in the general journal as they transpire. Accounts payable, dedicated column, so won't be updated to the end of the period. Now, as for the general journal, which would record anything that's not cash or credit related, these will be updated as they transpire in the general journal, as well as anything that would relate to the accounts receivable or accounts payable ledger. So let's look at a couple of transactions. Here we sell merchandise on credit to Jennifer Nelson for $16,800. It cost us $12,200, so we are going to record it in our sales journal since it's a credit transaction. Now we will want to update Jennifer Nelson's subsidiary card in the subsidiary ledger, so we're going to update that so we can see how much she owes us. Next, we are going to purchase some office equipment on credit, and it will go into our purchases journal since this represents everything done by credit. We are going to, as an account, describe it that it's related to office supplies and that we purchased it from Mac Company. This is just notations to help us be able to remember what happened months from now when we look back at this. date of invoice, terms. This is accounts payable, and this is office supplies. So both of these will be recorded at the end of the period, these totals, but we want to update the amount we owe this vendor, so it's going to interface with the subsidiary ledger. So we're going to show that we owe Mac Company the amount that we used to purchase those supplies. Next, we're going to sell some merchandise on credit. So it's going to go in the sales journal, which records all of our credit transactions. And we'll want to update Hoskins' subsidiary ledger card. So we'll update that. Next, we're going to purchase some merchandise, and since we have terms, we know that we didn't pay it, so when we purchased it, it was on credit, so we go into our purchases journal. We're going to show that it's due to DeFore Industries. Again, in all of the dedicated columns, so it won't be recorded to the end of the period, but we do want to update the subsidiary ledger for DeFore Industries. Next, we're going to borrow $26,000 cash from Commerce Bank, and so we'll go into our cash receipts journal where we record everything related to cash. So the account credited will be long-term notes payable. The debit will be to cash for $26,000, and our other account will be accredited. Well, now, since it goes into other account, we want to immediately record that in the general ledger. This won't be recorded until the general ledger until the end of the period, the portion of the cash total associated with the long-term notes payable. So we are going to see that we'll be updating long-term notes payable, and we can see that our cash, we won't be recording this $187,140 until the end of the period. All right, so it's a one-sided transaction, if you will. Next, we're going to receive a cash payment from Jennifer Nelson for the sale minus the discount. So this is the amount we received from her. This is the discount she took, and this was the amount in our accounts receivable balance. So yes, we're going to check that that was the correct amount in her accounts receivable balance, and then we would recalculate that the fact that the 2% was calculated correctly. Next, we're going to receive a credit memorandum from DeFore Industries for merchandise that we purchased but then later returned. So since it's not a credit transaction or a cash transaction, will be recorded in the general journal. So there would be accounts payable. We're going to reduce the amount that we owe them by $200, and we're also going to record the fact that inventory has returned to us in the amount of $200. So since it's in the general journal, it will have to be recorded in the general ledger. So here we have a credit for inventory for the $200. Here we have a credit in the controlling account for accounts payable of $200. And we are also going to update the subsidiary ledger for DeFore Industries in the amount of $200. Next, we're going to get a cash payment from Hoskins less the discount. So Hoskins less the discount. So we want to update the subsidiary ledger card for Hoskins. We see what he owed, we calculate the 2%, and then we record the fact that the amount has been paid that they owed us. Next, we're going to purchase some store equipment on credit from Schmidt Supplies. So we're going to use the account here to put a memorandum that we're purchasing store equipment. Our vendor is Schmidt Supplies, where we're going to record the account payable that we have since it was done on credit, but it's also in other accounts, and since it's in other accounts, we're going to update the subsidiary ledger for Schmidt, but we're also going to update the general ledger for this purchase of store equipment since it's out of the ordinary. So here we can see that Schmidt, we have recorded the amount that they owe us, we owe them rather, and then we're also going to, in the purchases journal, show a debit for store equipment to show that we purchased that. Next, we're going to sell merchandise on credit to Marjorie Allen. So since it's on credit, it goes in the sales journal. We'll want to update the subsidiary ledger for $5,600. Next, we're going to send DeFore a check in payment of the invoice. We're going to take the discount, and we're also going to make certain that we take into consideration the return. So here we can see that we recorded the return. So this is the amount that we owe them. So that's the amount that we want to show that we have paid off and we calculated the 2% correctly. So next, we're going to purchase inventory on credit from Welch Company. So this is our purchases journal of our purchases on credit. And we want to update the vendor file for Welch Company. Next, we want to issue a $600 credit memorandum to Marjorie Allen for defective merchandise that we sold her and she returned. So this, since it's not credit and it's not cash, we go into the general journal. So we are going to record it under sales returns and allowances. Also, we are going to want to update our controlling account in the general ledger of accounts receivable, and we also want to update Marjorie Allen's subsidiary ledger. So let's see what that looks like. So we're going to update Marjorie Allen's subsidiary ledger to show she originally owed us $5,600, but with the $600 return of merchandise, now she only owes us $5,000. Our accounts receivable, the controlling account in the general ledger, will be credited for $600 to show that that transpired. And we're also going to record it under sales returns and allowances, one of our contra sales accounts. Next, we're going to pay our payroll. And so since this is a cash disbursement, it'll be in our cash disbursements journal. It is, we're going to record the cash, and since it's in other accounts, we're going to record that in the general ledger. So what we'll have is under other accounts, we can see that our payroll, this is our posting reference, is going to be account 621. So we can see that it's recorded immediately, and it's recorded on the 31st when the transaction transpires. So we're going to record that in the general ledger. Next, we have some cash sales. That for the month, they were $134,680, and their cost of sales was $67,340. Now, this would normally be recorded at a point of sale and would be recorded daily, but just to keep this, not to have repetitive entries, and because we're just theoretically trying to learn what to do, we are just going to record this once for the month. And of course, since it's a receipt of cash, it's going to go into our cash receipts journal. So this would be our cash sales. This would be the amount of cash we're debiting, amount of sales we're crediting, and then this is our cost of goods sold / inventory amounts. And so now let's see how all of these sales journals with the end of the period totals, how they interface with the general ledger. So here we have our accounts receivable. We're going to record the total amount in the sales journal in the accounts receivable controlling account. Next, we are going to record the $32,600 in total in our sales, and we're going to show that it comes from the sales journal page 2. Same thing here, sales journal page 2. Next, we're going to record the cost of goods sold in inventory. This is inventory. This is going to be the credit. We're going to show that it comes from the sales journal page 2. Cost of goods sold, sales journal page 2. Once we've recorded these in the general ledger, we will put a check mark showing that that these posting references have taken place. Actually, I'm sorry, these posting references, you're not going to see this in a Connect project, but you may see it in the Perdisco project. You may have to check off in Perdisco when you update the subsidiary ledgers. All right, so let's look at the next one. Let's look at your cash receipts journal. And so now we have the amount of cash coming, the total amount of cash being debited here. And so now let's look at our accounts receivable. This is the total amount from the cash accounts receivable. It's updating our controlling account. Next, we have all of our cash receipts for our cash sales. So that's coming from our cash sales. Next, we are going to be updating for all of the sales discounts that we're taking. So we'll be updating that at the end of the period. And then we are going to be recording cost of goods sold. So this is cost of goods sold, total amount here. And I should also have one for inventory. I don't have one for inventory, but there also should be a line updating the total amount for the inventory. And we can see that this all came from the cash receipts or the receipts journal, page 3, receipts journal, page 3, receipts journal, page 3, receipts journal, page 3, etc. We can see that when it goes to a specific account, when we posted it to the general ledger, we would put the account number here. We would put a check when we're updating the subsidiary ledgers. We would put an X when we're updating the accounts, the sales, cash sales. We use X for the cash sales and all of the related transactions there. And then at the bottom of the account, when we post the total amount to an account, then we use the account number. So cash is 101, sales discounts is 415, accounts receivable is 106, sales 413, the X for the cash sales, and then these are the two accounts for cost of goods sold and inventory. And I forgot to mention it here, but these are to the accounts. This is how you show that you posted it into the general ledger. All right, now let's see all of the things that are coming from the purchases journal. Purchases journal, page 3, are debit from accounts payable. Our debit to inventory, okay? Our office supplies debit, and we purchased our office supplies. That was the total for the month. Our store equipment, well, we recorded that during the month. Then this is from the purchases journal, page 3, our accounts payable. So this was the total amounts of accounts payable that we credited for our purchases. And so those would be how the amounts come through. So every time you update the subsidiary ledger, you're going to put a check there. Since this was recorded in the general ledger plus the subsidiary ledger, then you'll put the account number and a check for the subsidiary ledger, and then these are the general ledger account numbers when you're posting this. Now again, all of the posting and the checking and all of that sort of thing, you won't see that in the Connect project, but you will see it in your Perdisco project. So let's look at the last one, the cash disbursements journal. And so we can see this is our credit to cash that comes from the cash disbursements journal. Then we can see this is our credit to inventory, total credit to inventory, account 119, account 119. Our other for payroll was recorded at the time that the payroll was paid. And then our accounts payable debit, we can see here the relief of accounts payable, and that the control amount for accounts payable has been updated. And so by the time that you add up everything that is due in accounts payable from everybody, you'll see that it will total $65,695. And then when we total up our accounts receivable ledger, everything that everybody owes us, we can see that it should be $5,000. And then when we go to accounts receivable, we can see, yes, our subsidiary ledger agrees, our general ledger agrees to our subsidiary ledger in the fact that it's $55,000.